Hey there, movers, shakers, and financial market makers. Welcome back to Investing Lighthouse, your quintessential guide to navigating the thrilling world of investments. Today, we're serving you an entire course of wisdom from none other than the legendary investor and billionaire Charlie Munger. Charlie Munger, an investment titan, is known to the world as the vice chairman of Berkshire Hathaway, the powerhouse investment company led by Warren Buffett. But he's not just a sidekick to Buffett. Munger's a superhero in his own right. His razor-sharp wit, ruthless rationality, and relentless reading have earned him a seat at the round table of investment legends. He's a man who started from scratch and has grown his net worth to over $2 billion. Talk about adding zeros to your fortune. One more noteworthy aspect of Munger's journey is his unwavering commitment to ethical behavior. For Munger, integrity is non-negotiable. He has always chosen to invest in companies with ethical leadership, clean accounting, and fair business practices. His belief in ethical investing should inspire all of us to look beyond mere numbers and evaluate the moral standing of the companies we invest in. During an interview in 2020, Charlie dropped 5 golden nuggets of wisdom, or as we call them, Munger's mental maneuvers, that have been integral to his success. Buckle up, folks, because we're about to dive deeply into Munger's mind and decode the secrets to his success. Munger's first mental maneuver is invert. Always invert. This trick asks us to flip problems on their heads to gain new insights. Interestingly, this wisdom wasn't birthed in the boardroom, but instead took shape when Munger served as a weather forecaster in the Air Corps. He was tasked with ensuring the safety of the pilots, a responsibility laden with uncertainty and high stakes. Instead of pondering, how can I ensure these pilots survive? Munger inverted the problem and asked himself, how can I cause the worst to happen? How can I kill these pilots? By asking this morbid question, he identified all possible threats and issues the pilots could face, which helped him understand what he needed to avoid to keep them safe. This mental shift, which originated in a military weather station, became a cornerstone of his investment strategy. So folks, as strange as it may sound, sometimes you need to think about how to lose to win. Invert your problems and you might find your solutions. For instance, instead of asking, how can I succeed? Invert it and ask, how can I avoid failure? By identifying and avoiding pitfalls, you essentially navigate toward success. Charlie often says, tell me where I'm going to die so I won't go there. Now that's some clever inversion. Let's look at another example. Say you want to grow your investment portfolio. Instead of just focusing on what stocks to buy, invert the problem. Ask yourself, what kind of stocks should I avoid? This might lead you to avoid companies with no competitive advantage, questionable managements, or unstable financials. By considering these questions, you can aspire to create a healthy, robust portfolio. Moving on to our second mental maneuver, humility. It is essential to recognize what you don't know, or as Charlie puts it, to understand your circle of competence. It's about sticking to industries or investments you know well, and not getting swayed by every shiny new opportunity that comes your way. Knowing your circle of competence doesn't mean being a jack of all trades. It's about being a master of a few. Specialization, my friends, is the name of the game. It's like sharpening your tools before carving your masterpiece. If you're a tech whiz, then dive deep. Know the market trends, understand the technologies, and get to know the players. Be so good that they can't ignore you. Munger once said, you have to know something about something to really have it work out okay. So find your something and know it inside and out. Remember when Bitcoin was the hot new thing and everyone jumped on the bandwagon? Munger and Buffett received some flack for not investing in it, but they stuck to their guns and admitted they didn't understand it well enough to invest. Their humility saved them from potential losses when Bitcoin's price took a hit. Up next is Munger's third mental maneuver. Stay rational. Make sure to avoid being influenced by short-term fluctuations in the market. As investors, we must keep our cool, especially during market downturns. Look at the facts, not the frenzy. In the early 2000s, during the dot-com bubble, tech stocks were skyrocketing. Everyone was piling in, but not Munger and Buffett. They kept their cool, stayed rational, and didn't invest because they believed the prices were too high. And they were right. When the bubble burst, they came out unscathed. On the other hand, if you hold shares of companies with strong competitive advantages, solid fundamentals, and promising growth prospects, don't sweat the small stuff. Don't get jittery if your portfolio value plunges. Munger's investment style has always been focused on the long term. Short-term trends or quick profits do not sway him. This long-term outlook is why he advocates for staying rational in the face of market volatility. He once said, "The big money is not in the buying and selling, but in the waiting." Did you know that Munger saw his holdings in Berkshire Hathaway drop by 50% from its all-time high? Not once, not twice, but 3 times in his lifetime. Did he panic? No. He stayed the course, kept calm, and held onto his investments. And look at where he is today. Remember, folks, the stock market operates as a mechanism that effectively transfers money from the impatient to the patient. The fourth mental maneuver is the KISS principle, or keep it simple, stupid. Munger advises looking for businesses with a simple business model and solid fundamentals. He once said, "We have 3 baskets for investing: yes, no, and too tough to understand." If it's too complex, Munger simply moves on. Munger and Buffett would rather own a simple business that even a fool could run than a complicated one needing a genius at the helm. They love companies that are so straightforward that success is virtually baked into their DNA. Remember, folks, when it comes to investing, simplicity is not just a virtue, it's a prerequisite. It is also important to note that they, first and foremost, always aim for that sweet spot, a simple business run by a wonderful person. And whenever they find such a company, they get really excited. Let's look at See's Candies, one of Berkshire's earliest and most profitable investments. The business model was simple: make great chocolates, sell them at a fair price, and people will come. It wasn't rocket science, but it sure was profitable. Last but not least, Munger's fifth mental maneuver is read a lot. This man is a knowledge-devouring machine. He is known for saying, "In my whole life, I have known no wise people who didn't read all the time. None. Zero." Reading exposes you to different perspectives, enhances your understanding of various industries, and aids decision-making. But of course, reading isn't the only way to quench your thirst for knowledge. In this digital age, the world is your oyster. Podcasts, webinars, online courses, TED Talks, you name it. They're all fantastic ways to broaden your horizons. Remember to diversify your sources of learning, just as you would diversify your investment portfolio. Munger once said, "I constantly see people rise in life who are not the smartest, sometimes not even the most diligent, but they are learning machines." So, be a learning machine, folks. To truly grasp Munger's investment philosophy, it's essential to know about his idea of mental models. Munger is an advocate for interdisciplinary learning. He firmly believes that to make intelligent decisions, one needs to use multiple mental models or lenses from various disciplines like psychology, economics, physics, and more. So folks, don't just read about investing, broaden your horizons. Say you're interested in the electric vehicle industry. Instead of just reading about Tesla, explore other players, the technology behind EVs, government policies impacting the sector, global trends in transportation, and so forth. This broad understanding will empower you to make well-informed investment decisions. Lastly, it's essential to understand that Munger's success was not achieved overnight. It was a product of discipline, patience, and decades of learning. For all the beginner investors out there, don't be discouraged by early missteps. As Munger says, spend each day trying to be a little wiser than you were before you woke up. Discharge your duties faithfully and well. Step by step, you get ahead, but not necessarily in fast spurts. And that's a wrap, folks. We've delved deeper into the mind of Charlie Munger, pulled out his most powerful mental maneuvers, and hopefully left you with a mind full of ideas and a heart full of enthusiasm. If you're excited for more insights from the investment world's biggest legends, remember to smash that like button and subscribe. Let us know in the comments how you intend to put Munger's wisdom to work. Until next time, keep learning, investing, and most importantly, having fun. Happy investing, everyone!